Welcome back to Wall Street Confidential. I'm Farnoosh Torabi, discussing MGIC's latest quarter, losing close to $1.5 billion. Jim Cramer, this is just,
Well, you read through the release, and again, it's one of these things. It's like the AIG, where it says, well, listen, we have these products. It wasn't really clear that they had it, and we're reserving for them. And this is a personal mortgage insurance that the banks get on mortgage. And it's very clear that there's just a gigantic spike in defaults here, 7%. You're using numbers like IndyMac did yesterday. And in 1990, you would see these numbers and you would think, well, everyone's going to pull their credit and these companies are just going to go out of business. But it's in no one's interest to put IndyMac into out of business. As Michael Parr, he would tell you no one could put them out of business anyway. It's like Fort Knox. MGIC, it's like Fort Knox. All these guys have enough capital to be able to withstand and ride out this period. And they do. Even though they're non-performers, they move the non-performers into this held for investment category instead of held for sale, which means they don't have to mark them down anymore. They should mark them down. But they don't need to sell them, so you don't know where the real market is. If they obviously had to sell, if MGIC had to sell all its obligations to someone else, it would just get crushed. And if IndyMac had to sell the loans that it has to the open market, they would get crushed. So they just hide them. Well, they don't hide them. They move them over to, there's accounting ledger to amend that you can use to make it so there's less pressure. They would object to the ledger to amend. They would just say, listen, that's what the law says. And it does. The law's on their side. But I look at IndyMac and I look at MGIC and I just say it's a wonder that they're in business still. And that's part of the problem. I've been saying over and over again that people think the Fed's reacting to any given month of retail sales or consumer price index, and they certainly do seem to react to inflation. But these are all deflationary things. The number of loans that are failing in IndyMac are extraordinary. And they've done a lot of joint loans with housing companies that are just getting killed here that you don't see. And that's a very deflationary thing too. But these places continue to hang on. There's lots of shorts, so they get any good news, they get finance. MGIC says it's going to needs financing. Someone will give them financing. They always give them financing. MBIA got a lot of financing. There is just, and this is the counter to all this, and maybe even the counter to the idea that the Fed has to cut. There is a tremendous amount of money out there. There's just endless amounts of money. And so guys like IndyMac, they can tap the money, and MGIC can tap the money. And I just can't believe there's this much money out there. It's very, very bullish.
And would you support money coming in from outside our borders?
Chinese. Look, we're in a crisis here. Now the Fed's not doing much to facilitate that. What the Fed needs to do, just so it's very clear, they need to cut rates so that everybody who put money in wins. Because they're taking a lot of risk to put money in at this level. But if the Fed keeps cutting, if you put money in with IndyMac, you're going to get a spectacular return, which is why these are all like call options. Every one of these, IndyMac and MGIC, these are calls on the Fed cutting more. And if they cut, you're going to make a lot of money here.
All right, that's the trade. Thank you, Jim Cramer, on Wall Street Confidential. Don't go away.
That's your action point. Take advantage of it.